welcome to Sprott Radio. I'm your host, Ed Coyne, Senior Managing Partner at Sprott Asset Management. I'm pleased today to welcome a new guest to Sprott Radio, Jeff Rhodes, Global Head of Operations at Goldstrom. Jeff, thank you for joining us at Sprott Radio.
Yeah, hi, Ed. Really good to meet you, and thank you for inviting me on to Sprott Radio. It's fascinating for a Brit living in the Middle East for the last 30 years, talking to colleagues in North America.
Well, let's start with from where you're sitting and the current umbrella you sit under, which is Goldstrom. Talk about some of the work you're doing right now with Goldstrom and in the general markets. What's happening right now in your world? What are you looking at today from an opportunity standpoint?
Opportunity standpoint, we look at the world of global physical precious metals, and we are involved in every aspect from really the first step of either small, medium, or large-scale mining through to processing into doré, which is then shipped into LBMA good delivery refineries around the world, and then ends up with kilobars or other value-added bars, which we then sell to high net worth individuals, family offices, and also to the trade. So we extract value from the value chain with a little bit at every point in that value chain, rather than trying to be one of the best sellers or best buyers. What we try to do as efficiently as possible is provide a customer service to every part of the market and trying to make a bit of money at each leg. And that aggregates into something we believe fairly significant.
You know, I know you spent the last couple decades in the Middle East and Asia. You know, what are some of the traditions that you've witnessed over there that really impact gold from a value standpoint or from a price standpoint? What could you talk about that you're seeing in the East that maybe a lot of our Western investors don't fully appreciate or recognize?
Well, certainly there is a seasonality to the world of physical gold. And using my experience over the last 50 years, in different parts of the world, that has different impacts. You know, for example, in the former Soviet Union, in the East, gold isn't really mined in the winter. It's in Siberia, it's too cold. And then you find that gold comes onto the market in the summer. And then you come to India, where there's lots of seasonality there and driven by monsoons in the summer. So when you get the monsoon season, physical demand goes away. And it used to be that you would see the markets very soft and very quiet in the summer and quite strong in Q1 and Q4. But in terms of seasonality, there were actually reasons for that. As I say, in Asia, you know, freezing conditions in the winter, no production, and then in the summer that comes onto the market. India is either number one or number two consumer in the world, whichever kind of report you want to read, but they're certainly in the top two. Now, that demand falls away in the summer because of the monsoon season. And then we get to the end of August, early September, and we start to approach what's known as the festival or wedding seasons in India, and the peak of which is Diwali. But there are a number of other Indian festivals that are celebrated, which, as I say, culminates in Diwali. But equally, there are times, Ed, where it's inauspicious, even during that period, to buy gold. And you will see on certain weekends during that period where it is good to buy, that you should stay away. So seasonality, the weather makes the difference, seasonality, and festivals, big impact on gold. And what tends to happen is that Indian families will decide to spend and have available to them to spend a certain amount of money. How much gold they purchase is determined by the price. So they're actually going to spend the same money. There was a guy when I was young, his name was Green. His surname was Green, but he used to believe that the price of gold was determined by a combination of monsoons and the Indian and Arabian housewives. That when they decided to go down to the Souk and buy would be when gold goes up. So I think, whereas we tend to look in the West at the financial markets and see gold as a financial asset, in the East, in Asia, it's always been seen as that physical safe haven store of value. And honestly, it goes back in India, thousands of years ago, there were literally hundreds, more than hundreds of kingdoms. And the kingdoms would actually be constantly fighting with each other. Even today, 40% of GDP is farming in India. So the farmers would always keep their wealth in gold. They dig holes on their land, bury their gold, run away. When the fighting was over, they'd come back and get their gold. This is a very simplistic way of describing it. But that belief in gold as the ultimate store of value when you need it the most is ingrained in the Indian psychology. And not just India, right across the subcontinent and indeed the rest of Asia, because if it's not number two, number one is China. And the Chinese have equally the same affinity as Indians, probably Chinese a little bit more, if you're more willing to take a risk. Indians very, very careful with their money. They buy low and sell high, whereas us speculators in the West tend to do the opposite, looking for a breakout. So I have a huge amount of respect for the Indian markets, for the Chinese markets, and the other parts of the subcontinent. Now, I haven't actually become a local, but it wouldn't, I do love living here, and I enjoy the fact that, strangely enough, with what's going on just down the road from where I'm sitting at the moment, it's probably one of the safest places in the world to live.
Interesting. Well, you mentioned that about farmers. There's a great book that came out quite a while back called The Land Remembered, and it was really about the development of Florida. It's by Patrick Smith, and it's a really cool book. But it's interesting is that they started off with cattle, they got into citrus farming, but they always used gold as their currency. And, this is 100 plus years ago. This is when Florida was developed, the fleeing Civil War and other things out there. But it's a good book to read because it's really about the establishment of Florida, but the underpinning is really about gold and its value 100 plus years ago as well. So it sounds to me like that's still happening in the East.
Honestly, it is. And you would have thought with the younger generation and Bitcoin and so on and so forth, yes, they are playing Bitcoin, but yes, they are very involved in physical gold. My son Oliver, who is just, I think 6 weeks ago, migrated to Vancouver. And I probably haven't had a meaningful conversation with him about what I do for a long time. He wasn't interested in gold. Then over the weekend, out of the blue, I got this list of gold ETFs and silver ETFs that he's now thinking about investing in. That's in the West. This is not in the East. So I do believe that the younger generation in the West, as in the East, is really tuning in to gold. I've been doing this a long time, Ed. Honestly, I don't think I've seen such a sustained period of strength in the gold price and in the underlying gold market as I've seen this year, because John Reed, in a piece for the World Gold Council, he referred to the fact that there had been 35 record highs in the gold price this year. And he may well have been referring to, non-dollar denominated records as well as dollar denominated records. But over the last few weeks, we saw gold post 8 consecutive record highs. And you would have thought with that kind of move that the 30-day RSI would have been sky high, would have been 75. Anything above 70 is a sell. 75, 80 has been to this year. It never got above 65. and currently it's sitting around 60, 62. There's something going on in the world of gold today. We're actually living an historic period for the gold industry. I think in the next couple of months, we might be saying the same about silver.
Talk about other parts of the world then. So, we talk about what's going on in India, Asia, Dubai has certainly expanded. What they've done is nothing short of incredible over the last couple decades in development. What are you seeing there as they become a modern economy? Is gold still showing the same importance there as well? Are we seeing this really across the board in Eastern culture?
Dubai, UAE is the center of the world, physically the center of the world. And the Emirates Airlines, with their business strategy, cottoned onto that and became a hub, one of the global hubs for the airline industry. But what that did at the same time, it connected all of the major physical gold markets of the world, both on the supply side and on the demand side. And it made it the logical place to become one of the world's physical gold hubs. In terms of what I would call gold redistribution, it's probably one of the biggest gold markets in the world because gold comes in and goes out. For example, what we did at Standard Bank, we supplied India, and there are 36 different states in India, and if you like, 36 different sets of rules. And so what we did, we hubbed physical gold holdings in Dubai, and we fed to our clients across the Indian subcontinent from Dubai. It was extremely efficient, and that efficiency and the ease of doing business here has just led to the UAE becoming one of the most important physical gold hubs in the world. Before you ask the question, and I'll bring it up anyway, probably one of the negatives over the last few years has been, if you like, the compliance question and AML and so on and so forth. I can tell you that the authorities here really have focused on this over the last 4 or 5 years, big time. And I would argue quite strongly that this is the most highly regulated physical gold market in the world. I don't think there's anywhere else where if you don't actually follow responsible supply chain rules, regulations, and policies, here you can go to prison. You can definitely be fined and you can go to prison. It really is serious. So there's AML, there's CFT, and so on. Everyone in the market here, not just refineries, but everyone in the physical market, even in the financial market, you have to follow rules strictly because they're not rules, they're laws. I would say a transformation in the UAE has taken place over the last 5 years, which is extremely relevant when you're saying this is a major physical market. Obviously, physical markets lend themselves to bad stuff. And so there is really, really strict rules and regulations that you must follow. And if you don't, you have a problem.
You've made a lot of interesting points today that hopefully our listeners are taking to heart. We're not here to call a price. I don't know if you have a price in the back of your head that you see gold going. I said, I've had people tell me that gold is expensive at $1,200, at $1,500, at $1,800, at $2,000. They missed the trade at $2,300. It continues to kind of do its job over time. Having said that, do you have sort of a vision as it relates to price over, say, the next 1 to 3 years? What do you see out there? Do you care to throw a price out there?
I do, yeah, I will. And I'll tell you how I have lived my life since 1978. The chief bullion dealer at Samuel Montague sat me down and said, keep a good diary, because we didn't have electronics in those days. So just write down all those factors you think is going to influence the gold price and then form a view, because we were a market maker, so you had to have a view. So ever since 1978, every day of my life, the first thing I look at is the gold price and what might be affecting it. And the last thing I look at night after kissing the missus goodnight is where is the gold price and what's going on. And so there isn't a day where I don't have a view. Now, that view can be one of three. It can be bullish, it can be bearish, or I don't have a clue-ish. So I do believe that we have made a fundamental shift in the price. If you went back 5 years, I would have thought maybe a price above 2,000 would be brief and we'd never see it again and we'd go back down. But I don't believe we'll ever see a price below 2,000 again. I'm actually skeptical that we'll see a price below 2,200 again. Over the next 1 to 3 years, I think $3,500 feels like a good number. Once we're above 2685, the all-time high of a couple of weeks ago, once we're above that, we're in technical blue sky. It's strange, though. I don't know whether you've noticed yourself, Ed, over the last 3 weeks, 3 or 4 weeks, gold has been very quiet. If you look at the trading volumes, the trading volume yesterday on the COMEX was 121,000 lots. Very, very light. Now, thing is, that's been the case. It's been light volume for the last month. I tell you what I believe it is. I think so many people are thinking, you know what, I really, really like gold, but it's a bit high to buy.
Right.
A bit high to buy. And there are people on the other side who have probably already sold and are a bit nervous about selling anymore because they're already short. So you've got this kind of standoff, and eventually that standoff will go.
Our own analyst has talked about this sort of, I don't know if you want to call it a pause, but I think you bring a good point about. Maybe a ceasefire is a good way to say it. I would agree. And look, I think people also have to recognize that all of that is done in the last year and a half in a strong interest rate environment, a relatively strong economy, depending on who you want to ask or talk to, and a relatively strong dollar. That's starting to all change as we speak, but that really should have been the opposite for gold, and it's done really well. So I think what you've kind of said and what I've heard on this entire podcast is that there is a wind of change effectively happening, how people view gold, who's viewing gold. We applaud that, of course. We've been doing this for over 4 decades, close to 5 decades as well, in one way, shape, or form. And so I really appreciate you taking the time today. But before we sign off, is there anything you'd want to say that I haven't asked that you think would be of interest to our listeners?
Well, I think you should have mentioned a little bit more about silver.
Okay. Oh, yes, you did bring it up. Yeah, please do that.
I honestly can claim to have paid the highest price ever, me, Jeff Rhodes, ever. Right, on I think it was the 20th of January 1980. The day, I think it might have been 21st of January. Gold fixed that morning at $850. Now, I was running the silver book then, and I was short going into that AM fixing. And I didn't want to be short. So I found someone who would sell me some silver, and I paid $55 an ounce. Right. Ed, I've still got that silver. I'm telling you, it only went one way for the next 20 odd years.
Yeah.
But I think this is the year when I'll finally be in the money. And I see a price north of $60 this year.
Wow. This year. Okay.
This year.
Okay. We're in the fourth quarter already, right?
I know.
Okay.
I know. You look at the chart, above 35, the next resistance is 43.
Okay.
Above 43, it's 50. There are 3 chart points between here and the all-time high of 50. So, because once silver starts to go, there aren't central banks standing in the way.
I just got invited to the Silver Institute dinner in New York in a couple weeks, and I am bringing to them the $60 call from Jeff Rhodes.
Please give my best regards.
I will. Well, Jeff, you have to promise us you come back on the podcast and we talk a little bit more about silver next time. How about that?
Of course. Yeah, I'd love to.
If a listener wants to kind of keep track of your world and what you're doing, how can they track you down or track down Goldstrom and just see what you guys are up to?
www.goldstromgroup.com and jeff@goldstromgroup.com. Delighted to receive any inquiries, and honestly, anyone who contacts us will get a reply.
I love it. Well, that goes back to what you learned so many years ago, right? Regardless of the size of the client, treat them all with the same respect.
All big clients were once small clients.
That's right. Well, Jeff, I can't thank you enough for taking the time today. This was a real treat to talk to you and get some insight on what's going on, both in the Eastern world, but also the Western world. And thanks again for joining us today on Sprott Radio.
I loved it. Thank you very much indeed.
Thank you. And once again, I'm Ed Coyne, and thank you for listening to Sprott Radio.
This podcast is provided for information purposes only from sources believed to be reliable. However, Sprott does not warrant its completeness or accuracy. Any opinions and estimates constitute our judgment as of the date of this material and are subject to change without notice. Past performance is not indicative of future results. This communication is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Any opinions and recommendations herein do not take into account individual client circumstances, objectives, or needs, and are not intended as recommendations of particular securities, financial instruments, or strategies. You must make your own independent decisions regarding any securities, financial instruments, or strategies mentioned or related to the information herein. This communication may not be redistributed or retransmitted in whole or in part or in any form or manner without the express written consent of Sprott. Any unauthorized use or disclosure is prohibited. Receipt and review of this information constitutes your agreement not to redistribute or retransmit the contents and information contained in this communication without first obtaining express permission from an authorized officer of Sprott.